So, like, for example, I can speak on Allstate all day, right? So if you have like 2 claims over the last 5 years, for instance,
So it's 2 out of 5 claims you can't.
out of the last 5 years, if there's 2 claims or less, then you're in the clear. And this is kind of where I'm taking it is in October, because that wasn't the rule. It was, hey, if you have 2 or more claims, like, we can't write it. As you've probably seen in the marketplace, a lot of people are going, hey, bundle your home and auto insurance. Well, that's Allstate's bread and butter. I mean, that's where you get the largest discounts associated, et cetera. But the other benefit they added was, well, if you do have those 2 claims, we're going to overlook those as long as you tie in your auto insurance and get the 20% savings on your home insurance, and vice versa with the savings on the auto by having them combined. And we'll go ahead and waive that. We'll go ahead and accept the policy for you to continue on.
Okay, so and that's just y'all's rule, but it's probably very similar. So for those listening, 2 claims in 5 years can do damage. I mean, so you want to try to really avoid making claims if you don't have to.
I don't ever slow up, no, I don't take shit. I got no love for the fakeness. If you wanna play tough, I hate this, I'll always show up. I don't ever slow up, no, I don't take shit.
Been doing it for 5 years now, and even from the time I started up until now, it's like, it's a completely different ballgame. It's so different.
So how long? So okay, how did you get into insurance?
Oh man, it's actually a crazy story. So for the longest time, I was actually in construction right out of high school. I mean,
Okay.
I was doing road construction, water maintenance, you name it, HVAC. I did a little bit of HVAC and as well. And I was like, well, if I'm gonna break my back, might as well benefit from it. So I actually enlisted in the Coast Guard. So I did everything, got sent out to boot camp out of Cape May, New Jersey. And as I was there, they kept me about a month and a half, but I got medically discharged because I had like a jaw issue, like an overbite kind of situation going on.
Really?
Which I didn't think that would disqualify
That would disqualify
me.
you. Wow.
Like, you go through the MEPS process and everything, and then they ship me out there, and it was like, you're spending more money feeding me and keeping me out here for housing than if you would have just let me, go on through with it. So they ended up booting me out of there. So when I came back home, my mom had a family friend that she actually went to high school with. He had an agency starting, and he was like, yeah, I'll get him licensed, get everything that he needs, and stuck with him for about 2 years. And then after that point, I kind of started outsourcing because it's different, right? I mean, you're in sales. It becomes a numbers game, financial kind of thing. And when you have the drive, you're like, I want to make more money. So I was like, well, I can't afford the truck anymore. Let me trade out of this. I went to Honda, and they were like, yeah, you're not making that kind of money. Like, that's not right. So whenever I signed the paperwork, they had bumped up what my pay scale was. I was like, well, okay, well, let me get to looking around. And I was making, a decent year was probably about 45 a year. I was like, okay, well, let me see what's out there. I did a couple interviews and told the guy, I was like, I'm looking to make 75, 80 a year, just from what I've been seeing with my experience now, having 2 years under my belt. And he was like, yeah, we're about the same margin. So based off his commission structure, it was 79.5. I was like, all right, cool. Well, you're going to lay everything out for me, and I know I'm going to smash these goals. I'm going to be able to hit over the top of this. Well, by year 1, I had made 95 grand. Year 2, I made 98. Last year was a record selling year for me. I did almost $1 million in sales, probably just shy of 900 grand.
Wow.
And I made about 135. So I was like, okay, well, I'm good at what I do. I love the service I provide. That's the big thing that I hear all the time is they're like, well, you're not like these other agents. It's not just transactional. You're not looking at me as just, hey, you're now my dollar bill, basically, and then shoo away. No, my step is let's break it down. Let's figure out what you need. I'm not going to set you up like these other agents with the preset, scale as far as your coverage is. We're going to figure out exactly what you need. Now, not everybody's willing to take that time to talk to you about it. A lot of people are just like, what's your price? What's your price? Well, there's a variation of prices. I can get you the cheapest, or I can get you, the most expensive, which is the cheapest out of pocket. It's just really what you're comfortable with. So when you sit down and break and have those hour conversations instead of a 10, 15-minute conversation with them, that is the biggest, honorary system that I have, because now it's like, well, I'm providing a service, I'm doing my job well, and it's exceptional on the other side. That is my goal. Mm-hmm. I don't want you to feel like you're a transaction to me. And I even use that in my verbiage when I'm talking to them. Hey, I'd love to get you, a good firm price point. I was like, but I don't want to be like these other agents where we're just going to send it over to you and you don't know who to call in the event of emergency. Here's my direct number. Here's my personal number. I always try to provide that cell out there. Because things happen on the weekend, offices are Monday through Friday. What happens on the weekend? Do we wait until Monday to try to figure out something about this leak on my roof, or what's the next steps? Mm-hmm. So it's more advisory. I love the advisory side of it.
So insurance, it works similar with real estate, where like you got to let everybody know this is what you're doing, and How are you, most of your sales, because it sounds like you're doing really good numbers,
Mm-hmm.
where are most of your leads coming from?
So it's based on, so my end goal is I want to start my own agency.
Okay.
I would love to be my own agent at a certain point. The finance side has to make sense before I can make that leap. But depending on who you're working for at the time, they're going to have different lead generations. So the first one I worked with, he was tied in with a home builder, Bloomfield Homes at the time, which was coincidental because my mom worked for them too. So I was like, all right, I got a good inlet. I already have the mortgage company they're partnered with, and they kind of supply the leads over. We just touch base with their buyers at that point. Then you kind of transition over to the new agency I'm with, where it was like solely marketing, where it was like mail out ballots that we send over with kind of an estimated figure, if you will, because obviously we got to run the reports, kind of get a more definite number to be able to scale off of any kind of claims, that kind of ordeal. But with this one, I mean, we do different mail outs that we do online lead generation. So if you're scrolling through Facebook or something, and you're like, hey, I want a quote on my insurance. Well, we get that notification and it gets assigned to myself.
Mm-hmm.
So now I'm reaching out to that prospect going, hey, I noticed that you submitted this. Want to see if I can go ahead and offer my services over to you. Now, some people are like, hey, I was just clicking it, just trying to find a number. That's completely fine. Let me give you a good number. That way it's not just a thought, but it's firm. Here's something to look at. So it scales, you can tie in, like, for example, you and I, right?
Mm-hmm.
The socializing is also a big thing that most agents that don't have the drive or don't have that end goal of I want to start my own agency, well, they're just riding that 9 to 5 out. Where with me, I'm trying to tie in with realtors, different loan officers, that kind of generation for myself. That way I'm not fully dependent on the agency itself for their lead source. So I get that plus whatever I generate, which is going to obviously double what you would do just on your normal 9 to 5.
Mm-hmm.
So it's definitely, that's why I always talk about work ethic because, I don't have a college degree. That's one thing that I always kick myself for because I'm like, well, could have gone back, but things just didn't pan out the way it should have at the time. But I'm proud of where I am because it's like, you don't think a 6-figure income, for an example, of something that somebody can do without a college degree. It's like, you got to have that education. But if you take that outside of the equation, anything, even the college side, what did you have to have for that? What did you have to get the degree? You had to have the dedication, the ethic, the drive to be able to get that degree. It's the same thing on the sales side, right? As long as I'm not just twiddling my thumbs, waiting for a phone call, I'm dialing out. I'm going to do the cold calling, try to get a prospect on the phone. So there's just a multitude that goes into it. So I always like to touch base with you yourself. And, we helped Jake Pierce close on his property, which I saw on Facebook. So definitely congratulations to him on that.
Yeah.
But yeah, I mean, it's just all about socializing, getting out there, making those connections. You hear word of mouth, right? So one realtor may have had a great experience with myself. Hey, let my loan officer know about you. Well, now I get to tie in with the mortgage company. So it all starts to have that domino effect, right? The more the merrier at that point. So you got to make sure you're socializing. I mean, if you just don't have the drive or your end goal is not there, then it's not going to be reasonable. You're just working a 9 to 5 at that point.
So for somebody who might be interested in getting into the insurance industry, is it commission? How does that work?
Yeah, that's
like,
a
how
great
are you guys
question.
paid?
So it's funny you bring that up too. So within my agency, so my younger brother, I actually got him on board 2 years ago with us.
Nice.
So I was like, hey, he was doing sales. He was a manager at Samsung, as a matter of fact, at Stonebriar Mall. So I was like, hey, I see you're working until 10 p.m. at night. Like, don't you get tired of that? Like, wouldn't you rather something that's kind of more suitable in hours? I'm a churchgoer, right? So that was part of the reason I got out of construction. I was like, well, you work Saturdays, you got Sunday, half a day basically on Sunday to kind of get that recoup, which I was watching your other podcasts as well, and that was the same exact thing. I think it's important, once a week or 1 day a week at least, or half a day, have that time separated to where you can kind of relax, unwind from that week. And that'll give you preparation going into next week. That way you don't feel drained all the time, right? You got to let that battery recharge.
Right.
So it's a pretty easy step. I mean, you get your licensing as far as how the pay is determined. So it's based off experience. So you do get a base pay. So I think at my other agency, it was like 25 or 30 grand. And the commissions on top of that. I asked for a little bit of a higher base with this new agency because I'm like, I've been doing this 2 years now. My numbers look good. I don't see a reason to shoot myself low, right? And that's the big thing, too, is you don't ever want to shoot yourself low. I mean, you know what you're worth at the end of the day. Same thing with this agency, as a matter of fact. I was with him last year, or I finished last year throughout with him, but year of 23, I ended up leaving in August because my son was due in December, and I wanted that step back to go, hey, I didn't have a huge father figure in my lifetime.
Mm-hmm.
So it's like, that's important to me. I want to make sure he has everything I didn't have. And that failure as a father, you don't want that.
Yep.
So I kind of took the step back and I was like, yeah, let's get into insurance. I'll have my Saturday and Sundays off. Saturdays can be more of like a socializing. I would have been working in construction, so why not still use that time to continue my career path? So I use those Saturdays like we're doing today to be able to kind of socialize, get that marketing out there, get my name out there. But you also get your commission bases. Now, it's dependent on the agency that you're working with at the time, because every agency owner is going to be different, right? I mean, the one that I have right now, he's got rental properties, $1 million properties off, the coast, that kind of situation. So there's different incomes. So they can pay a little bit better on the commission side. Some of it is very negotiable. Like if you feel like, hey, this base was really low in comparison, hey, it's in your shoes. I mean, you don't have to accept the position. If it's not what you're looking for, it's not what you're looking for. Same thing with when my son was going to be due in December of 23. I was like, well, I want to take a step back. So I requested a hybrid position, or a remote position, in other words, because driving from Sherman to Plano, I mean, you're talking about 3 hours a day. And then my wife drives to Lovefield every day. And I'm like,
Oh, yeah.
somebody's got to cut back. We
Yeah.
can't both be driving 6 hours a day. So I took that role. He didn't have a position available for me at the time. I knew my worth. So I actually hopped agencies and I started selling out of Wisconsin and Illinois.
Oh, wow.
And then I worked with them for a while. Completely different ballgame, by the way. I mean, you're talking about something that's not routine here in Texas, like basements everywhere,
Yeah.
Water pumps in the basement. So there's different RMPs is what we call them, which is like a risk management. So I ended up jumping into that, and then by December timeframe, start the new year, new goals, right? So everybody's always trying to get fixated for next year's goals. Well, my prior agency owner that I'm, again, currently with, he reached out in December and was like, hey, I'd love to open the can of worms for you to start this remote position. I was like, I'm not asking you, to do anything that you're not comfortable with. Like, I can understand and respect how you want to conduct it. But he was like, no. He was like, we have aggressive goals next year. Like, I want you part of the team. So jumped back on January 1st last year. Was the third in the office, because you got to get that drum up. I mean, it's not just jump in and, hey, you're going to start selling immediately. You got to get that pipeline built up and start working it. So I was closing all the deals. I ended up third in the office out of 7 or 8 agents, just jumping back in after a 6-month break with them. So that's one of those moments where, you're proud of yourself, you feel accomplished, and that accomplishment is going to be the drive factor. I mean, you don't want to see yourself fail. And that's my big thing with my family. And I tell my wife all the time, I'm like, I will not fail you guys. I'm going to provide, I'm going to be the provider, and I'm going to be around for everything. So it's kind of a tug of war, I mean, if you're going to settle somewhere, it's completely fine. Just don't get comfortable. You always got to kind of keep that opportunity open. Now, granted, there's different companies as well. I've always been solely Allstate focused. So I can't speak on like State Farm or Geico, these other competitors out there, because it's completely different. I mean, it's a different ballgame kind of in that scenario as well. Different systems, different risks that they allow that Allstate may not have, or, vice versa. So it's just very ongoing. So I'm not going to get comfortable with where I am. I'm always going to keep, a door open kind of situation. But as long as you have the coach is what I would say, because my first agency owner, which total blessing, I appreciate the heck out of him for getting me in the industry. But going into the second agency that I was with, I mean, this guy was a mentor. Like, hey, here's the numbers. What you don't see as just an agent versus an agency owner. So it's like, here's our month to date. Here's the goals that we got to meet. Here's our close ratios. You start getting into more the number game at this point. So there's a lot of behind the scenes you don't see as like a licensed sales producer, if you will. But when you jump into the shoes of an agency owner, there's a lot more than just the sales side that goes into it. Now you got to focus to the marketing side. Like, how are we going to change this? Are we competitive? Are we not? Do we need to switch locations? So there's just a lot more to it. And I think I'm ready for the leap. It's just a matter of the finance side and kind of taking that jump.
Yeah. I mean, that's so I love, hearing I love talking to high performing individuals and how you can balance family and work and still be successful. I think family is like one of the most important things, so like hearing that is really cool. So talk a little bit about what's the difference between a company like yours where, it's Allstate, but it's direct office versus working with maybe an insurance broker where, some people are always wondering, should I work directly with somebody or should I go to a brokerage who they know shops it around? Like, what do you think the pros and cons of that
You
are?
mean like an independent agent in a
Mm-hmm.
sense?
Mm-hmm.
You know what? That's a great question. So I actually have a buddy who I met through my wife and one of her mutual friends. We went to a wedding out in Corpus Christi, and I sat down with this guy, and come to find out, he was my neighbor. He lived like 2 minutes down the road. Never knew this guy, and I'm like, okay. So he was actually a coach at the time and doing insurance part time through the independent side. I don't know too much of the logistics as far as what it looks like to be an independent agent. I've never been personally in that field myself. But if there's ever a position where, let's say we have a client who's got like 3 or 4 claims on their home insurance, right, over the last 5 years, well, instantly I'm going to know, hey, there's nothing really I can do at this point for you, but let me get you in contact with my buddy Evan at that point in time, and you get a wide mix. Now, like I said, I'm kind of shooting in the dark a little bit. I'm just trying to base it off
Mm-hmm.
what I've heard, but there's a bit more competitiveness to the fact that instead of just being solely reliant on Allstate, for an example, right? Well, if I can plug in all your information, get different quotes from a couple different companies out there, who's going to give me the best rate with the best coverage?
Mm-hmm.
Because, and that's what I tell everybody all the time. Everybody gets so, especially in this economy, right? I mean, you hear it all the time. The economy's hard. It's hard to afford certain things. Well, the last thing you want to do is strip down coverage on your insurance. What I tell my clients all the time is, hey, we're going to shop for a new 2025 Corvette, for an example, right? We're going to get a new toy in the mix. Well, did you figure out what it costs to protect that toy? That's the big question, right? You get the phone calls all the time. Hey, Blake, just wanted to call in about this new vehicle. Want to add it to my insurance. All right, let's take a look at it. Plug everything in. Wow, that's very expensive. Well, did you shop this around before you purchased it? Or did you just purchase it and then now you're searching on the back end for this?
Right.
And you hear that all the time. And it's kind of a give and take, right? So now I bought this toy. Where can I cut costs to be able to afford this new toy? Well, what we instantly feel like we need to do is we're going to start dropping coverages.
Yeah.
Well, we hit somebody and we drop those coverages. Well, now you're less protected, and chances are you're going to owe more into that accident now.
Yeah,
So,
I see that a lot with real estate. People are calculating the payment of the home without the insurance.
exactly.
And then they purchase it and they're like, well, hold on, I didn't realize it'd be this expensive. And so I've just started telling people like, hey, you need to factor in insurance and taxes, but it's insurance. And so
And
that's like
insurance doesn't get cheaper, right?
Right.
I mean, you got to factor in, there's wear and tear just like a vehicle at that point. Meaning the roof, for example, you go through another year of wear and tear, you get high winds, and maybe we had a couple hailstorms. Well, these insurance companies are going to rate it that way too.
Mm-hmm.
So each year it's normal to see an increase on your insurance because it's another year of wear and tear on the roof. Now, when you get the roof replacement done and everything, you're going to naturally see, hey, now I'm rated with a brand new roof. Your insurance costs are going to go back down pretty significantly depending on how long that time frame was. I would say if you had like a 10-year-old roof and you get a brand new roof, for an example, now you're rated back to a 1-year-old roof or a 0, for instance, kind of gathering into that first year. Well, you get a much better rate because it's low risk. Whereas if we have 10 years of wear and tear, well, are there any pockets that water's going to seep through? Is it going to cause further damages than just a roof replacement? Are we now talking about, the wood rotting or any kind of mold fungus that may develop through that? Now insurance pays out more, which is the reason insurance goes up for that.
So what do you see is the most common claim, at least here in the Metroplex?
Oh, especially here recently, hail claims.
So
That is a huge one.
roofing.
Mhm.
So what exactly is going on with insurance here in DFW? Because it does seem like some of these businesses aren't even quoting homes.
Yeah, and you know what? That's a great observation. So there's been a lot of companies that have pulled out of Texas completely. So you may hear the rumors or the joke of like, hey, Texas is the new California. And it's because insurance has become more expensive and more companies are paying out. So like, for example, I can't think of any specific companies just to name off, and I don't want to slander anything.
Yeah,
yet,
for sure,
by all
for sure.
means.
Yeah.
But for example, I have clients that are like, I just spoke with somebody this week and they're like, hey, Blake, my home insurance is getting non-renewed in June. Like, I need to shop insurance.
Yeah.
They have me a pretty good rate.
Same thing happened to a good friend of mine,
Yeah.
a mutual friend of ours, actually.
Oh, really?
Yeah.
Yeah, so it happens, and the reason is because that main company paid out so many claims here in Texas that they're like, it's not profitable. So what do? You have to start withdrawing and then focus on where you are profitable, and then when the market comes back down or the cost to repair roofs, for an example, come down, then they'll jump back into the game.
But it's something that we can't control if there's
Exactly.
hailstorms.
Hmm.
So how I mean, people are pulling out. For the companies that do stay in, is it just getting more expensive? Is that
Yeah, so they have to account for it, right? So in order for what insurance companies are going to look at is, let's just say in this zip code I have X amount of clients. Let's just say it's 100 households, right? Well, if I'm paying out 75 of those households in claims, well, it's not a very profitable margin because it's not every 5 years we're going to get a brand new roof. I'd say on average it's 10 to 15, but we do get those larger hailstorms where it's baseball size hail, popping
Mhm.
holes into the roof, that kind of thing, and it forces it. So because Texas is prone for that, that is the reason that a lot of these companies are going, hey, we didn't anticipate for this amount of hail, for an example. So now we're paying all this money out into this, but we're not charging enough for our insurance policies for that. So in order for us to recoup that, we got to take that step back. Kind of the same thing in California when those wildfires happen,
Mhm.
right? There's a company out there that owned majority of those homes. Well, when that fire happened, they lost so much money out there, they started lifting rates across the states. It's not just solely this state in California, hey, we're going to lift y'all's rates. No, it's we got to recoup that. So everybody across the nation is going to go up. So I don't know too much of that insight just because I'm not, working for corporate directly or, any kind of those knowns that's above my pay grade at that point. But yeah, I mean, it has a lot to do with the payouts and the losses. Now, when it comes to like the hailstorms, for an example, I mean, it happens, and that's kind of where the corporate levels are going to have the final say of if we're going to insure it or not. So, like, for example, I can speak on Allstate all day, right? So, if you have like two claims over the last 5 years, for instance, then Allstate actually changed it toward the October of last year because everybody was shopping insurance, and they have the claim from that 2021 freeze that we had in
Mhm.
February,
And there's a big
plus a hail
hailstorm. Yeah,
claim, right?
yeah.
So now we instantly have two. So the pressure on us as agents with Allstate was, I can't close these houses; they're not eligible. How
So
did
it's 2 out of 5 claims you can't. You can't.
So out of the last 5 years, if there's two claims or less, then you're in the clear. And this is kind of where I'm taking it is in October because that wasn't the rule. It was, hey, if you have two or more claims, like we can't write it. Well, as you've probably seen in the marketplace, a lot of people are going, hey, bundle your home and auto insurance. Well, that's Allstate's bread and butter. I mean, that's where you get the largest discounts associated, et cetera. But the other benefit they added was, well, if you do have those two claims, we're going to overlook those as long as you tie in your auto insurance and get the 20% savings on your home insurance and vice versa with the savings on the auto by having them combined. And we'll go ahead and waive that. We'll go ahead and accept the policy for you to continue on. Now, I don't know what the other insurance companies are doing. They may have a standard where it's like 3 claims in the last 5 years. So that's the differentiation that I don't see the inside of the competitors, if you will, but solely with Allstate. So it's very hit or miss.
So, okay, so that's interesting. Okay, so if you, and that's just y'all's rule, but it's
Mhm.
probably very similar. So for those listening, two claims in 5 years can do damage. I mean, so you want to try to really avoid making claims if you don't have to.
You know what? And I'm glad you brought that up. So you hear it all the time in the marketplace. We run the reports. For example, let's just say I see there was a hail claim, but it had a $0 payout. Well, what they don't tell you is even if you inquire for a claim, it's still going to get a claim adjuster involved. It's still going to go through the process, and it's going to deem as you had a claim. So if you have a claim-free discount on your policy, the correct measure, and this is where I solely pride our office for it, is when you call me and you're like, Blake, I'm ready for a roof replacement, for an example. I'm ready to file the claim. My first question is going to be, well, did you have a roofer come and do an inspection? If your answer is no, we're not doing anything until that roofer gets out there. Because if they deem it, hey, there's not enough damage up here, no need to file an insurance claim. Well, I don't want to be the agent that was in charge to push that through. Now you get a $300 increase because you lose your discount.
So you want a roofer to verify there's legit damage.
You always want to verify, even if it's plumbing. If a pipe bursts in the wall, all right, well, what was the cost of repair? Because we know what your deductible is, but if it's less than what your deductible, there's no point in filing this claim. But if we exceed it, even if it's over $1,000 over your deductible, at that point, we're going to have the conversation, should we file this claim? Because it's $1,000 more than your deductible, so it's beneficial. You save $1,000 out of your pocket. Let's just say it's $5,000 claim, right? But your deductible is $4,000. It's questionable if you want to go ahead and pursue that because you're going to see that increase.
Break that down, because I think insurance guys,
It's
makes sense
language.
for y'all. It makes sense for you guys. But like, what's a deductible? A lot of people don't even understand that. And how do you meet it? How do you not meet it? Like, what does that look like?
Yeah, let's talk about the two different criteria, right? Because you're going to have home and you're going to have auto. So you're going to have different deductibles associated with each one. So what's standard on a home policy, for example, you're going to have wind, hail, which usually includes your tornado deductible. That's where you're going to see your hail deductible, for instance. Or if we get a tornado and it rips apart the roof, we're going to file a roof claim on that. Now, there's different increments. This is kind of where determinations on the price point that it comes in at, because the lower that you go with your deductibles, meaning the less I come out of pocket should I have a loss, the more expensive my home insurance is.
So if your deductible is like $3,000, well, I guess it's relative. So it's hard. It's hard.
It depends on the property, right?
But it's okay. Okay. So the deductible pretty much means I have to pay this first before insurance will cover anything, or it's like taken out of, like, I'm paying this much. If I have a large claim, I'm paying this in cash, pretty much.
Great question. So it's dependent on the company. Anything I say, I'm going to be speaking on Allstate terms. Okay. Yeah. So, for instance, for us, let's say you have a $5,000 deductible. It's a $20,000 roof is the replacement in that, right? Well, it's not saying, hey, we need the $5,000 before we start going ahead and doing the repairs. It's on the back end. So Allstate's still going to get their adjusters. They're going to get the contractors, and then they're going to put the new roof on, and they're going to say, hey, we have $20,000 to be able to pay the contractor for the roof. Well, if your deductible is $5,000, we're not going to pay the full $20,000. We're going to pay $15,000. The other $5,000 is for you to pay the contractor.
So you still are paying it. So it's okay.
That's why the roofers have those different deals where they're like, hey, if you reach out to me, I'll take care of your deductible, because they may not even charge you the $5,000 that you would be on the hook for in theory, but that's up to the contractor themselves.
So, okay, so for in that example, say you need a roof replacement, it costs $20,000. Your deductible is $5,000. You have an option for a $5,000 deductible or a $3,000. If you choose the $3,000, that's all you're going to come out of pocket, but your monthly rate will be higher than the $5,000.
Mm-hmm.
Okay, got it.
And so it's going to vary based on, so let's just assume it's a $400,000 home, right? That's essentially the coverage amount that we're looking at for a property. Well, your standard deductibles are going to be like on a percentage base. And this is where a lot of people kind of have that. This is a different language, right? I'm just very confused. What are you talking about by percentage? Well, when we talk about the percentages of your deductible, it's based off that $400,000 in coverage. So if you do a 1%, you're looking at $4,000 is your deductible. If you do a 2%, that's $8,000 is your deductible. So if we were looking in that theory and you go with a 2%, my deductible is $8,000. Well, you kind of have a good intermediate policy. We're not at a 5% where you're looking at a $20,000 deductible. So you're going to have an intermediate pricing scale with that. But not everybody's comfortable coming out of pocket $8,000. So at that point, is it worth, bumping down to a 1% and paying $50 more a month? Does that make more sense? Or does it make sense just to go with the high deductible, save the pocket? And we talk about a break even, which it's hard to discuss that without looking on paper. But basically what that is I take the price of the insurance, right? Let's say this is your bottom deductible, 1% across the board. We're coming in at $5,000. Well, if we were to take that one of those deductibles and bump it up to a 2%, but now your cost is not $5,000 for the year, it's coming in at $3,500 for the year. Well, that's $1,500 in savings. But what's the difference of your deductible at that point? Well, it's $4,000. So what I consider a good break even is if you can hit that break even within 4 or 5 years' time, that means you've made up your money. You don't experience any losses within that duration. Well, should anything happen now going forward, you've made up the money in the difference of your deductible. So it makes sense at that point to save $1,500 every year going forward, make up that $4,000. Let's just assume it be. And then at that point, now we saved that already. So now that's sitting in your bank off to the side.
Yeah. So if you, okay, so if your deductible is $8,000 and it costs you $10,000 to get a new roof, it may not be worth filing the claim. It just depends. So one of my questions is, one of the things you hear is, okay, well, you might as well make a claim because they're going to raise they do it off of a area. So like if there's a hailstorm in a certain area and a bunch of people are filing claims, your rate's going to go up anyway.
Exactly.
So some people say, well, file anyway because your rate's going to go up regardless. Have you ever heard that?
Yeah, I mean, so that kind of goes back to it's naturally going to go up, right?
Right.
So the question is at that point in time, like you probably see it all the time in these neighborhoods, right? It's just like, hey, maybe they're replacing a couple of roofs, but then the word gets out to the neighbors and they're like, oh, well, maybe I need to replace my roof.
Yeah.
Well, roofing companies are in the same industry, right? I mean, they're looking to make a buck too. So if there's not substantial damage, but there's enough to get away with it through insurance and they have that experience and they'll pay out on it. It's not always in the benefit, right? Because we had more longevity in the roof age where, yes, insurance is going to go up and it's naturally going to go up. But if everybody's doing it in that same neighborhood, well, now they're increasing it across the board instead of just having, a handful of roof claims. Now, okay, instead of a $5 increase a month, now because everybody's doing it, we're going to look at $100 increase a month for everybody.
Yeah, yeah. But if that's going to happen, like if all your neighbors are doing it, wouldn't it make sense just to claim? Because it's like it's going to go up anyway. But I guess that kind of goes back to like with y'all's policy, two claims in 5 years. If you have that is to get qualified. Like if you have
Exactly.
but what happened? At what point do you get kicked off? Is it the same? Like if you have two claims within 5 years?
So usually if you're with the carrier, like if you were with us and you signed up for the initial and you had two claims and you file a third one, for an example, it's not going to get to that point where we're going to go, hey, you can no longer be insured with us. It's going to have to be some tremendous amount. Like you had a water claim, you had a water backup, you had a roof replacement, another roof replacement because of hail damage. At that point, you become, in a sense, more of a riskier. And this is more or less a question for like a claims agent. It's just kind of out of my expertise. But that's kind of the rhythm that you look at. So, for example, with like my older brother, I mean, he's, Lord forgive me, but he's a terrible driver. I mean, like everybody in the family would tell you.
Yeah.
But like he had 4 or 5 accidents on record. He was with USAA at the time. He came on to us. We got him a better rate. And then he tacked on a couple additional accidents. And I'm like, you better be careful because at a certain point, once you are in more of that risky position, and this would go for anybody, right? It's not just an insurance base, but let's just say if I was giving a loan amount to you and you were going out and gambling with that money, if you're not bringing in any kind of profit to it, you're not worth it at that point, right?
Good point.
So insurance still has to make money because if they have a total loss for everybody, we got to make sure there's enough funds in that bank account to be able to cover everybody and get everybody rebuilt. It's the same kind of situation. So I don't know what the criteria is specifically with Allstate. Me personally, I mean, I've seen a lot of, different records out there. I haven't seen anybody ever get kicked off or non-renewed for an instance. I've only heard about it from other companies and them going, hey, they're just non-renewing or they're withdrawn from Texas completely. So it's not often if you file those claims, you're instantly going to see like a non-renewal notice. They're usually going to tell you on like a prior claim, like, hey, we need to kind of try to mitigate this in a sense before they're just like, all right, we're going to shut the door.
Yeah, well, I've heard a few. I mean, it seems to be here in Dallas, especially North Dallas. A lot of people are not getting renewed. But it's probably from a lot of these independents or maybe smaller companies that are pulling out. Because, like, the big insurance brands aren't going anywhere, I think. I mean, although I've heard certain brands, we don't have to say their names, are no longer writing policies here, but you never know.
They limit, that's one of those things where like they'll throw their shield up and then they're like, okay, we're comfortable again. And then they lift it.
Okay.
So it's name of the game. They're just looking at the risk of that zip coded area.
Yeah.
Because hailstorms don't happen everywhere. But in this certain zip code, you may have had 6 storms over the last 3 years versus this one where it only had 1 hailstorm.
Yeah. Yeah. So what are questions people should ask, like when they're shopping around their insurance? What are the most important things they should be asking about? Because I think a lot of times it can be not very transparent. It depends on the agent. Like
Exactly.
You're a great agent. You're very transparent, but somebody might. I've heard complaints of, well, I got a really cheap price, but then it wasn't disclosed. Like, hey, your deductible is 4-5%, or your coverage is only. It's not even the full worth of the home. So, like, I think that's two parties' faults. It's the buyers of the insurance for not being educated, but also the agent for not being transparent. It's like when buyers are only focused on price, maybe that's not the best route. It's like, what are the questions they should be asking before they purchase a package?
Yeah, so if we're focusing solely on the home insurance side, big thing that a lot of, especially first-time home buyers, and what I wanted to say on top of that is it's not necessarily the buyer's responsibility. It's the agent's. The agent's we're providing a service, right? I mean, we're going to send out the applications for your signature, and it's your responsibility to go through it and just make sure, hey, it's all accurate. This is what I'm comfortable with. But at the end of the day, if the agent's not telling you, so the main questions that when it comes to a home side, what's the coverage amount? Now, as a first-time home buyer, what we think in our head is we're going, hey, I bought this house for $450,000. Well, how much of that was land cost? Because your house burns down and your land's going to be there. Insurance doesn't care about your land. We're focused solely on the home itself, right? Now, just like you being in the real estate market, I mean, when you go in, you take a look at it like a Zillow webpage, right? And you're like, hey, the going rate is $175 per square foot. Well, it doesn't make sense to insure that for anything less than that. You actually want to pad a little bit on top. And it's not because we're taking into account land cost, but there's additional fees that insurance pays out on. So let's say my house burned down, right? Well, the very first thing they're going to have to pay for is debris removal. They got to get all the brick, lumber, etc. off the lot before they can actually rebuild. So they're going to clear that out. Our agency last year had a 3,000 square foot home that burnt down, and they paid out $75,000 just for debris removal. Well, that is going to strip down from the dwelling because that's the amount of coverage that you're signing up for. Some companies have that to where the debris removal is separate, for instance, so you may have a separate coverage for that. So with what I'm speaking on is when our dwelling coverage is there, let's say it's $175 a foot, we're going to insure at $450,000. You may not get that full $450,000. You're probably going to be in that $375,000. That's going to be debris removal, custom builder, and a custom architect fee that is involved with that. Now, the big question that sometimes I get is they're like, Blake, well, you know what? I'm going to downsize. I'm going to build a smaller house. Well, it's still going to require that custom architect to come out there, reperform the layout. It's still going to require us to clear a lot of debris. So the main one is dwelling coverage. What you don't want to do is, I don't want to insure a $450,000 house for $350,000, strip down the coverage, and they come to find out, they turn around and say, hey, it's going to cost $430,000 because there's an $80,000 difference in that. Who pays that? That's the homeowner's responsibility at that point, right? Because they signed the contract with insurance to pay out $350,000.
Right.
So it's very important. If you don't have an agent that's going to talk to you about the dwelling coverage, it's a red flag immediately. I mean, that's the most important one. The other ones are going to be deductibles, like you had talked about. We don't know exactly how much we're going to pay out in the event of a loss. Well, I'm very clear with my clients. Hey, I don't want to break your bank should anything ever happen. Like, here's the numbers that we're going to talk about. If you had to come out of pocket $4,000, is that going to break your bank? No, not necessarily. Okay, well, at this point, what are you kind of more looking for? If $4,000 isn't going to break the bank, what if we did a 2% at $8,000 and we dropped the pricing of the home insurance? Say it's $1,000 in savings. Would that still, be something reasonable for you? You got to break these down. I mean, because if I had a loss and I wasn't my own agent, I'd be like sitting here just like anybody else going, hopefully nothing happens, but if it does, what is my out of pocket going to be? That's number one. Because that happens immediately because it's all about retention too, right? You want to make sure that your clients are happy. You keep them on board for years down the road.
Yeah.
But they have one loss and they're like, Blake, why am I paying $12,000 out of pocket? Well, I wouldn't have done my job initially and been like, hey, we could pay for a more expensive package and lower that for you. But not every agent's going to do that. A lot of agents may have a preset of, hey, we're doing 2% across the board. Just say 2%. They don't go into the dollar amount on it. It's just, yeah, this is a 2%. It's what you currently have. Big question that I always ask my clients as they become new onboarding clients with me is, when was the last time you spoke with your agent? Because within my agency, we're going to touch base usually 30 days prior to a renewal, let you know of any kind of new markets, because we have a system where it auto calculates new market values for the upcoming year. So you may have been insured for $350 as we've been seeing these homes appreciating in value. Well, maybe this year we need $375. So we're going to talk to you about that because now if you have a 1%, it's no longer $3,500. You're looking at $3,750 as your deductible.
Right.
So you got to have the breakdown going into it to make sure, hey, everything is clear on their end. And then that's also why I provide my contact numbers, because it's like, you ever have questions, I'm your resource. I mean, you get in a car accident, you're going to go, what do I do? You're going to call the police and you're going to call your agent because you need to figure out, hey, is this covered? Like, what's the best method?
Right.
Because what used to be, 5-6 years ago, for an auto standpoint, right? If we got a small fender bender, we used to be able to get out of the car, exchange insurance information and go, hey, take it to an auto body shop. There's no reason for us to get insurance involved. Let's just pay it out of pocket, right? It's going to be the same fix either direction. Well, that's not what they do anymore. Everybody's looking for the quickest turnaround on the payout. They take your insurance and your ID card. They call your carrier and go, hey, here's the policy number of your client. They just hit me. Well, now you have an at-fault accident on record. And that is the number one reason people shop auto insurance, is because once you have one at fault, even if it's a $200 fender bender or you totaled a $75,000 vehicle out, it's still going to calculate as an at fault. Well, your rates end up going up because it causes what's called a surcharge on your driving record. So now one accident, you may be paying, 20 to 40% more on what your normal payment would have been.
When it could have been avoided by just maybe paying that cash or off.
Well, that's the thing, though, is it's completely in the other person's hands at that point, because I was liable. That would be like you and I are driving. I hit your car. Here's my insurance information, but go take it to a shop real quick and I'll just pay it for you. Well, how do you feel about that? If you didn't know I was an agent, you'd just be like, no, I'm going to go ahead and call your insurance company and let them know you hit me. Well, now you have an at-fault accident. My
Yeah,
rates go up.
I see.
But Allstate has accident forgiveness built into their plans. So you throw that in there, you get one accident forgiven every 3 years, even if it's a fender bender or major, we totaled somebody else's vehicle, you're going to have that first one forgiven, meaning you're not going to see that 20-40% jump. So now if you're clear, let's say that happened by the end of year 1. Well, if you go the next 2 years with no accidents, start year 4, you're going to get another one to be able to
I see what
be
you're
redeemed.
saying. Yeah. So here's a question. When you make a claim, like when you have roadside assistance or you lock your keys in your car and you have to make the roadside assistance claim, does that count as a claim?
No, so that's a very minimal one. That's why you'll see like different memberships out there because that's completely different, like set aside fund through the insurance companies. So it's not anything that's going to cost thousands of dollars for an instance. You may pay $100 for like a locksmith to come out there and get you back in the vehicle. So that's a completely different one. What they're usually going to be looking at is like any at-fault accidents. Non-at-faults to an extent are also kind of in that ball field. I don't think it has like a huge toll until you hit like a numerous amount. Like let's say you had like 6 or 7 windshields over the last 3 years, for instance, right?
Yeah,
I mean, at that point, stop following the person so closely in front of you.
Right. Well, cool. We're running out of time. We could talk about this stuff all day. So how can people find you?
Yeah, great question. So you can reach me in multitudes of ways. My direct line for the office directly is 972-987-1983. And we are located in Plano off McDermott in Ohio. You can also reach me. Is it okay if I provide cell phone information?
Whatever you want.
All right. So my personal line is 940-287-5904. And if you do reach out to me, just know I'm not like a lot of agents out there that will set up that preset value. So if we need to tailor down, figure out exactly what you need for your policies, let's make sure that happens and get you the savings you deserve at the end of the day.
Cool. And are you on any social media at all?
So I don't have anything like specific to the insurance side. I do have Facebook, like my personal Facebook. I hardly use Instagram here and there, but I do throw my business cards out there I try to touch base on it like once or twice a month. You've probably seen it out there. But I think once I start getting in that endeavor of getting my own agency started, that's when I'm going to definitely start being on that social media side.
Good stuff. Well, I appreciate you coming on. It's good to get you on.
I appreciate you having me.